I think, I mean, when it comes to like, I think there's two different things there is if I have more money than I have time, then I can be a passive investor. And I think we should all aspire to be full-time passive investors, unless you just love real estate, and that's great. I don't love real estate. I love what real estate does for me. So I use real estate to help me, like I use that for my purposes, but
it's a great qualifier. I love that. Sorry, just to highlight that I don't love real estate, but I do love what real estate does for me. I think that's a good thing for a lot of real estate investors to recognize, whether you love the asset or whether you love the benefits.
What is going on, everybody? And welcome back to the Abundant Journey podcast. I am your host, Nick James. And as always, we got Nick Aufenkamp hanging out with me today. But some of you might be surprised to see we have a familiar face on the screen. If you're watching on YouTube, thank you for checking out the video. If you're not, go over to YouTube and check out the video. But we are hanging out with Bronson Hill today. Bronson, how are you, bro?
I'm good, man. It's great to be back. It's great to see you guys, and I love what you guys are doing here, and I'm looking forward to having a great time here.
Oh, absolutely. Well, it's funny because we were talking here before we hit record. You handled the Nick and Nick in our early days as we were fumbling through what even a podcast is and how to talk to people, because I think that we had you on and you were like one of our first 10 episodes. And so thank you back then for being gracious. And hey, at least we had a great enough connection that you were willing to come back on.
Oh, absolutely. No, I've enjoyed staying in touch with you. I love the conversation. I love what you're doing, and you're doing some great stuff, both in business and real estate. And I just think it's great to have conversations with really smart people about, what you love to do. So
yeah. I couldn't agree more. We deem you as the really smart person, so thanks for hanging out with us. And so Bronson, it's been a while. It's been about a year. So tell our audience, just for folks we've picked up and who are hanging out with us now, tell our audience a little bit about who you are, what your journeys looked like, and the early days to get you where you are today.
Yeah, well, it all began with a young boy and a dream. No, I'm kidding. We won't start that far back. I started, I'll just give a quick overview. I was a youth pastor for a number of years, and then got into medical device sales. So I'd go into surgery and, help doctors, in the OR or in surgery, how to, do their surgical devices. So it was very interesting. But the thing that really lacked for me is that I wanted to have financial freedom. And a lot of people say financial freedom, but what to me it really meant, I think a lot of people, when you really think about it, it really involves time freedom, right? It involves actually having the time to do the things that you want to do. And so I started to pursue real estate, had a rental house just from years ago that I kind of became an accidental landlord. I lived in another state, kept the house, and then started buying single family houses with a relative in another state. And, there's a saying, when the student is ready, the teacher appears. So I had this mentor come around who said, hey, why don't you do multifamily apartments? And I'm like, I'd love to, but I don't have the money. And he said, well, you can raise the money. So he taught me about something called syndication, which is what you guys do as well. And then basically, I just learned how to raise money. So we started a meetup. At the first meetup we organized, it was a large meetup. I basically had asked somebody who ran a meetup, hey, what if we did another meetup, but it only talked about apartment buildings? And she said, that sounds great, and then I said I would do all the work. So she said, that sounds even better. And so I showed up, found my first investor there, and that was my first 100K, and then found a partner. A lot of things have happened that have kind of allowed things to scale up, but it's been quite a journey. Now we've raised over $40 million for different real estate and other business deals, provide cash flow appreciation and tax benefits for high net worth people. I've had 2,500 interviews with investors, and then I wrote a book, and now I'm writing my second book. The first one's called Fire Yourself. So it's how do you replace your working income with passive income in 3 years or less. This one's called Rich Brain. So I just got the art for it. And it basically is, how the wealthy change their brain to change their bank account. So it's kind of a Rich Dad, Poor Dad meets Atomic Habits. What are the things wealthy people actually do that actually make them wealthy? Because most people think that people are either born with money or not. And it's actually the complete opposite. 86% of millionaires are self-made. Fidelity Investments did a study in 2019. So these are learnable things that we can do to invest in ourselves and grow our wealth. I rhymed.
Yeah. No, I love it, man. It is, for one, I love how you've been able to fit into so many different kind of streams and been a help to so many people on whether it's real estate syndication. I know you've had a lot of conversations about investing in other different asset classes. I've seen things that you've hosted recently about gold versus Bitcoin. And so you're engaging on a whole lot of different levels. But there was something I wanted to ask you about. I saw an analogy that you used recently about a comparison between money and Legos, which I just thought was a brilliant analogy. And you know which one I'm talking about? Am I putting you on the spot?
Yeah, no, I do.
I would love for you to unpack that. And I'm curious too, as you unpack that, if there's ways in which you feel like that connects to either Fire Yourself or to your new book, The Rich Brain.
Yeah, well, money really, if I'm a big Warren Buffett guy, and he talks about money a lot. If you really want to learn about wealth, listen, he talks about money, and he talks about the idea of stewardship, right? So it's the idea of whether you are a person of faith or not, we've been given a life here for a limited period of time, and we have an opportunity to impact others if we make it not just about ourselves. We obviously have things we need. We have, we need shelter, we need food, we need, we like having experiences, we need to be healthy, take care of our bodies, but there is the ability to actually impact other people, which is really, really amazing and worthwhile. And so with Lego, so I heard this illustration from someone, I don't remember who told it to me, but it was the idea that, money is like Legos, and you can really build what you want to build. So when people work with us, it's like, I don't always say this, but it's thinking like, well, do you want to build a castle? Well, we can build a castle. Do you want to build a dragon? We can build a dragon. What is it you want to build? And so it is kind of a choose your own adventure. And so Legos, just as we were when we were kids, we can really stack block upon block, and we can kind of figure out where we want to go. Now you can just take a bunch of Legos and you can just kind of build random things. But as you start with kind of with the end in mind, right? You start with the why or the end in mind. You can really kind of work backwards and say, well, if I want to create this life that I've got a net worth of $5 million or $10 million, whatever. Well, what are some ways to be able to do that? What are some ways to build in that direction? So I think it's a thing that in your life, it's just something that it just, as we take Legos and we start to build, that's what we do with money. And a lot of times we don't always have a great intention in mind, but it's just thinking about what do we actually want to build? And so that's, I think, as people who work with, people, their investments, and I think we have about 250 active investors now. It's just awesome to be able to help them build what they want to build.
Yeah. That was the thing that really resonated with me. It was just that this idea of that, like, okay, if Legos are the equivalent of dollars, you can amass a ton of bricks, but they really serve no purpose unless you know what you're going to build with them. And it's been kind of interesting as our YouTube channel's been growing. We had somebody that commented, they took issue with how deep we go in the interviews about putting purpose behind money. They're like, it's entrepreneurship. It's simple. It's just about getting the dollars. And so your analogy, I think, really spoke to that it's like, no, actually the dollars don't mean anything unless they have a greater purpose, unless you know what you're building with. And so I'm curious, in the things that you've written and the experiences that you've had, what are some of the ways that you either ask questions of your clients or that you help counsel people to put their money to work to build the life of their dreams?
Yeah, so I think I have a lot of thoughts on this. I think that really, like I talk about in my book, and I'll just share the new book I'm writing called Rich Brain. I've had 2,500 interviews with high net worth people. And it's amazing because, when you actually start talking to people that are wealthy, they really do things very differently. They say the average, American, to feel wealthy, they'd have to have a net worth of 2.2 million, right? Which is a lot of money for some. Someone say, oh, it's not a lot of money, but it's a fair amount of money. And so, what does it take to be able to develop wealth, right? And I've really kind of broken it down to a few things. And the biggest one really is mindset. The biggest thing is that Brené Brown in her work talks about the idea that the difference between people that achieve great things or really have great relationships or, these type of things is because, and the people that don't, it's really that they feel worthy of it, right? And so the first thing is that if I, come from a middle class or poor household, whatever, and I never get to a place where I feel like I deserve or I have the ability to earn a lot of money, or it could be $100,000 a year or $1 million a year. And I had a friend who's a physician say that, yeah, like somebody who makes $100,000 a year, they'll just kind of always find a way to make $100,000 a year. And somebody who's making $1 million a year, they'll just kind of find a way to do it. And some of it has to do with worthiness. And so there's some practices around that, I call them, this is my initial thought, is wealth whisperings. They're kind of like wealth affirmations, but just things that you say to yourself. And as you speak to yourself, you actually create, right? You actually create these things in your life, because if you don't speak it out, it doesn't really become a real thing. And when you actually say it, it actually, something starts to begin to happen. And I believe that, a lot of the self-help people talk about just using, your words to actually create. And so if you want to, this sounds a little woo-woo, but I think it's really, really true in my life. And I'll give an example. I went through a divorce 7 years ago, unfortunately, and I came out of this just feeling no sense of self-confidence. But through the process of creating an affirmation or wealth whisper, whispering around that, I was able to just basically speak that out. And over, I did not right away, but over 6 months or a year, I started to really just from the inside feel that confidence, that worthiness, and things like that. So it can sound a little cheesy, but I've seen people be able to do this and be able to really scale up. So that's one. Another one, I mean, I can get into the other ones, but there are specific habits people do that really allow them to feel worthy of wealth.
Yeah, I mean, well, one, the woo woo, it kind of makes me think also of that book Think and Grow Rich, which was published, like back in the 50s, I think, and I remember, even reading that about 10 years ago and feeling like, oh man, this guy is out there with the visualization, the amount of money that you ultimately want to have, but it's a number of people that have really affirmed how well that works. And I like the framing there of the wealth whisperings. And in as much as, I don't want you to give away too much of the value in your book right now.
But sure.
I mean, habits are so helpful. And so in as much as you want to speak to any of those habits that either you've cultivated or that you've seen consistent across those 2,500 interviews, I think that could be really helpful to hear.
Yeah, absolutely. Yeah. The other, so the first really pillar, there's 3 pillars. One is, these idea of wealth whispering, the mindset piece really, and there's some practices around that. And then another one is never ending learning. If you look at people that are wealthy, a lot of like Warren Buffett, Mark Cuban, Oprah Winfrey, a lot of these people read hours a day. I mean, literally they read all the time. I think Warren Buffett reads several hours a day at least. And you think of it like, it takes a lot of time. It's a lot of effort. I mean, to read a physical book, it can take you hours. Or if you listen to it, whatever. I try to, like, when I go on a jog, I'll listen to it, or when I'm in the car. But, I try to I look at this really because I've realized a lot of wealthy people, they're having a call to learn about our investments, right? So we're having all these calls with wealthy people. And there's a lot of the things they could be doing, but they want to get in the deal flow. They want to learn about how this investment works. They want to learn about the thing that's coming up. And so, for me, I really look at it like it's like a part-time job. Like, I have my job or my work I do, right? I impact people. And then I've got the side gig, right? It doesn't necessarily pay me up front, but it's going to pay me over time. And I mean, financial education, even the funny thing though, is it doesn't have to be, it can be all different types of books. I do like, nonfiction in general. I mean, I like a lot of biographies, and I like, because I can pull from people's stories and be like, oh, well, they did this, I could do this. So this applies here, either great political or just historical figures. And as you read and as you learn, and again, I still think it counts. You can count the books that you listen to. I'm very good at retaining. Some are like, oh, it doesn't count if you listen to it. I was like, no, it totally counts. So last year I was able to finish 98 books. So in 2023, and I make a goal. I'm a little bit behind on my goal this year is 90. So we'll see how I do. But I think I'm at 39. We're in kind of mid-June, so I'm kind of just a little bit behind track. But it's great to be able to continue to learn, to kind of push yourself, because what happens is you read a book over here, like I mentioned, and you can really bring it into another sphere. You can bring it from investing into life, into science, into sports, and all these things. And it just kind of makes you, it does a lot of things. First of all, you can make these connections, you learn these things, and it says, history doesn't repeat, but it rhymes, right? So if you learn other things from other people, you can see it and it applies to your own life, but also makes you a much more interesting person. So as you start talking to someone, you're like, that reminds me of this story I read about this historical thing, whatever. And then people are like, they just find you as a very interesting person because you're not just watching TV all the time, right? You have things that you're pulling from different places. So there's ways to learn. I obviously love the book learning. So that's the second pillar. The third pillar, I'll just touch on it briefly, really is about, the average of the 5 people, you're the average of the 5 people you spend the most time with. So if you want to change who you are, you want to change your financial situation, you've got to be around people that have a different financial situation, right? And it's almost in every area of life. So if I look at someone's wealth, their health, their spirituality, their habits, all the healthy, whatever, all the things that they do, it's typically going to be a pretty good average of the 5 people they're around. So if you just think of, well, if I want to grow my wealth, who are the 5 people I spend the most time with? Well, if I want to change that, I better get someone or 2 people or more, like people in that kind of inner circle and learn what they're doing, right? And just so wealthy people find a way of doing this.
And I love that. And I think, as you share and you are talking really of catching up where you've been the last year, the education, what the theme that I'm hearing from you is you've really embraced a proactive lifestyle versus a reactive. And I think so many people are reactive. You're proactive in the education, in who you're around, in the building with the wealth. And we get to see the results of that years now later. You more than us, but you get to see the results of being proactive. Walk us through maybe we're taking a stroll down memory lane here. Walk us through when you had that shift from reactive to proactive and maybe some of the lessons learned, because I think about the audience. I think about a lot of people who say, hey, I want to be where Bronson's at, or, there's no surprise in your journey here because it's been intentionality day in and day out. But maybe talk about that shift that had to happen or when it happened for you and what impact that made.
Yeah, so I think we all have, shifts at different points in our life. And for me, a big shift happened when I was, like I mentioned, I went through that big life change, went through a divorce, which is a big change in my life. And I was approaching 40. And I thought, man, I feel like I have more in me to give. I feel like I've got more in there. And I don't want to I thought of myself when I was 70 or 80. And I just thought, I don't want to be looking back and just regret, I wish I'd tried. I wish I'd just at least given it a shot. And I just think if we're honest with ourselves, a lot of us, we hold back. We're kind of taught to, kind of like we, as kids, we express ourselves and we're coloring and we're doing all these creative things. And you talk about content creation, kids are incredible. I have a daughter who's 11 and, just content creation. And then we get to be I'm actually about her age, 5th grade, 6th grade. And then we start kind of being a little more self-conscious. And a lot of us, we kind of fall in line and we do the things that we're supposed to do. But I want to be someone who lives a bold life, who just, goes after their dreams. And, and what I realized, it was really terrifying to me, honestly, the idea of leaving a $200K a year job to go just out on my own. Even though I was making money doing real estate and I was doing well, I was like, well, what if it doesn't work or whatever? And I thought and then somebody kind of mentioned to me, well, if it doesn't work, you could always go back to medical sales. And I was kind of like, oh yeah, I could always go back to medical sales. It kind of gave a little bit oh, what's the worst that could happen? And I think sometimes when we play out the worst that could happen, it's we don't like to think about it, but it's also well, what would I do? If this thing happened, if it didn't work, would I go back to, I could just go back to it. Right. And so, it hasn't been perfect in what we've done. We've had a few days really challenged. I mean, this last couple of years with the rising interest rate environment, and we've shifted a little more to go to other non-real estate stuff that provides cash flow appreciation and tax benefits. But we're doing well, and we've got deals that are going really well. And so, I just continue to learn and grow, and it's been a lot of personal growth. So I think the big turning point was just really, making a decision. Tony Robbins says it's in your moments of decision that your destiny is shaped, right? So when I actually decided that, hey, I'm going to leave my job in 3 years, and I was able to do it in just under 3 years. But it happened when I made the decision, when I actually committed a decision. And so if somebody's listening, well, how do I actually start in real estate? Well, you make a decision that you're going to take the actions, you're going to do it. You may not even know how to do it, but if you just decide to do it and you're committed to it, you will figure it out.
I'm curious, as you think about making a pivotal decision like that. I mean, I want to ask you this question in particular because you're familiar with so many different asset classes, and I'm sure that this is one that you get asked all the time. But for the person that's thinking about, okay, I've heard really good things about real estate, so I'm going to go all in. I'm going to become a real estate investor. But then, as you mentioned too, the last couple of years have not been like it was 2019, 2020, early 2021. It's been a really tough real estate market. Do you think that in any given asset class, if somebody makes the decision, even if it's a hard time in the market, if they're committed and stick with it, they're likely to find success? Or how big of a role do you think timing plays? Not necessarily trying to time the market, but just looking at the macro factors that are all around you. How much attention should early investors pay to that kind of environment?
Yeah, I think it's a great question. What is the right time, and what is the right time to invest? And I am of the belief that there are times that it is better to invest in certain assets, and that's why we do real estate, we're doing multifamily, we have development stuff, we've got car wash, we're looking at some self storage, we've done some oil and gas, we've done ATM machines, we're looking at actually buying an e-commerce business now, multiple of those. So like we're looking at a lot of different things. So I think as an investor, it is good to say, well, what are my goals? Like it really typically comes down to cash flow, appreciation, or tax benefits, or all three. And so real estate really offers often a good mix of all three. It's hard right now to get in most real estate. It's hard to find cash flow, anything that really cash flows much at all. And so it becomes more of a long-term or, appreciation or tax flow thing, or tax benefit thing. But I think, I mean, when it comes to I think there's two different things there is if I have more money than I have time, then I can be a passive investor. And I think we should all aspire to be full-time passive investors, unless you just love real estate, and that's great. I don't love real estate. I love what real estate does for me. So I use real estate to help me, I use that for my purposes. But
that's a great qualifier. I love that. Sorry, just to highlight that I don't love real estate, but I do love what real estate does for me. I think that's a good thing for a lot of real estate investors to recognize, whether you love the asset or whether you love the benefits. Not to interrupt you, but I just that was a good moment.
Yeah, that's it. Because what does it do? And that's where, when you think about it, real estate is just a vehicle. It's just a Lego. It's just a tool to get you where you want to go. And so there's other tools to do that. But I do think for most people, when they're starting out, I think they start talking about being a passive investor. There's being an active investor. So if you don't have if you don't have a lot of money to invest, then you leverage your time, right? You take your time and you leverage your time. And so what that looks like, could be like me. I'm learning how to raise money, learning how to find deals, it could even be smaller stuff, single family. I love multifamily, love larger stuff, because I find it's a similar amount of work, but you get way more benefit by doing larger deals. It's just kind of this mindset myth of I've got to start with a single family and then go to duplex and whatever. And you can do that, but it just takes a lot longer. So I think that there's different ways to do it, and I do think real estate is a great place to start. One, because it's very understandable for most people. Most people understand real estate because they've lived in an apartment, they've lived in a house, and then it's from there. Once you learn how to do real estate, then you can go to other assets. You can also start with other assets, but I just think when you're learning, it's very helpful. It's a very understandable asset class. And then even too, when you tell friends and family about it, they immediately have a point of reference, and it's easier to go from real estate to something else, to go to I'm going from real estate to car washes, or real estate to oil and gas, or whatever. People they follow that a little more than just I'm doing this oil and gas thing. It's well, it's harder for a lot of people to follow that journey, but everybody understands real estate.
That's really good, and that's helpful. And I think to piggyback on that just a little, you and I've talked about how you're a jack of all trades when it comes to different asset classes, but you've mastered raising capital, and that's something you're very good at. So to put you on the spot a little bit, the proverbial wisdom that I hear and have heard for years is just pick one thing and stick with it until you've got that one thing done. Do you fall in line with that camp and group, or are you more universal and find that you got to be flexible and agile as things change?
Yeah, I think it's challenging. I'll go back to a little bit of my journey. When I first started in larger deals and multifamily, it's challenging to get in your first deal. It's challenging to get the first deal done. There's a real resistance, and it's just because people don't see you as being an industry insider. It's harder for brokers to take you seriously. It's harder for people to want to give you money. There's a story people have about you and me, and okay, I was a medical sales guy, right? So they know, oh, well, you're a medical sales, Bronson. It's almost like if I were to go to my car mechanic, and I've known him for 10 years or something, and I start asking him to fix my car, or hey, whatever, and he starts saying, hey, let me tell you about this real estate deal that I'm doing, and it's just totally out of the blue. I'm like, it's oh, that's interesting, but it just doesn't make sense. If he's like, hey, why don't you invest with me, whatever, I'd be like, dude, fix my car. You're the car guy, right? You're not the real estate guy. So I think with people, it's important, if you want to get in real estate, to start telling your story, start telling the story of who you are. So for me, when I started, I wasn't sure. I really thought I'm going to actually find a deal. I thought I'll be a deal finder. And then looking back, it's kind of ironic. I had 10 years of sales experience. I did well there. So like, raising capital is a sales role. And so it's no surprise that I was trying both. I was trying everything. And I was like, I'm going to bring a deal. I'm going to do this. But it also gave me a lot of I understand deals to a deeper level than I did if I'd only started trying to raise capital, because there's a myth. A lot of people that raise capital really don't know what they're doing. They're just simply like, hey, you want to invest? You want to invest? Just hitting the phones. So I do think it is good over time well, there's kind of a combination to try some different things. And one example of this is my daughter. Like I mentioned, she's 11. I told her, hey, this last one, she wasn't really sporty at all, didn't really do sports. And I said, hey, you got to pick a sport. You can pick whatever you want, but you got to try something, right? And I just want her to try these different things, because you don't know what she's going to like. And then she tried soccer, and she loves soccer. And she's on a soccer camp today. So it's like, I think with what we do, we have to be willing to try different things, to do these low risk experiments that if it doesn't work, we don't lose all our money, but it's like, it just costs us a little bit of our time and effort. And so, but then over time, we do need to focus on one thing, because, and I meet people that are like, oh, I want to do large multifamily, whatever, and I'm going to do this, that, and everything. And it's like, well, you can't really do everything with 100 units. It's very difficult. It's very few people actually do 100 unit where they raise all the money, they operate the deal, they found the deal. It's just too much for one, I think, to really do it well. And so I think it is important over time, as you're trying different things and going to meetups and asking questions and learning, or even podcasts like this, you figure out what your focus is, and then you hone in and do it.
Totally.
Absolutely.
Yeah, that's really good. And I mean, I think that's absolutely right in terms of kind of once you find where your really skill set is at and where you thrive most, being able to operate within your lane, the place that it feels like downhill work. There's an analogy a friend gave me once that is like, you can have a wheelbarrow filled with 200 pounds of rock, but the work that is uphill for you is going to be a whole lot more miserable than the downhill work, even though it's kind of the same amount of weight. And so his encouragement in that was, find the thing that feels like it's downhill, so that you're not always trying to push the rocks up the hill, like managing a 100-unit multifamily, when there's property management groups and others that you can lean on for those things. But I also think that it's interesting, is what Nick was kind of pointing at, is with you having gotten into a bunch of different asset classes, and you listed off all of the different things that you're into. I mean, I imagine that some of that has to do with even the principle you were talking about earlier of constantly learning. And it sounds like you read really broadly, so that it's not like every book that you're picking up is just on real estate syndication. And I imagine that kind of taking that generalist approach to even your reading and literature kind of helps inform your vision for opportunities that are elsewhere. I don't know if there's anything that you would add to that, but I guess the question in there is how have you trained yourself to see where deals and opportunities lie?
Yeah, it's a great question. There's a great book out called Range by David Epstein, and he talks about often we specialize, and this kind of goes against what I just talked about, specializing, right? So I'm broad in my learning, but I'm focused in my actions. But basically, the book called Range, it basically talks about, is it better to be a specialist or a generalist? And he would make the case that actually generalists, or have people that have multi-specialties, can actually do way more. So for one example of this is 3M, the company that does, all the chemicals and different things. They had a thing where they would post publicly, and they may still do this. They posted their unsolvable problems, like this, that all their engineers, nobody could solve. And they had like a cash prize if people could solve these. And something like 35% of them were solved. And they weren't solved by like engineers. They were solved by like dentists or lawyers, or other people that had this like multidisciplinary approach, or they had other things that they learned that they were able to bring. Oh, let's try this, or let's do this. And so it's an interesting idea that I think in our learning, I don't remember specifically your question. It was more about, can you repeat your question again? I think I'm distracted.
Yeah, really just how you've trained yourself to identify opportunities. Training that vision.
Yeah. So I think it goes in with that, where, when you're looking at an opportunity, you have to step back and say, as an investor, what is my goal here? Whether you're an active investor and you're raising the money, whatever, what am I trying to accomplish? And it's really important. It's not just I'm trying to make lots of money for the future. It's like, that's great. But like, if you're trying to quit your job and fire yourself, like my book said, you need to work on your cash flow. That's the number one thing. Making a lot of money in 5 years or 10 years, like that's great. That's not going to get you out of your job. If you can increase your cash flow by $1,000 a month, that gets you closer to your number, which is what are your expenses, your rat race number? What's the number you need to cover? Maybe it's 6,000 or 10,000 or 3,000, whatever that is. If you can get to where you have passive cash flow, you're free. You can do, you have the ability, even if you don't want to, you have the ability, if you needed or you wanted to leave your job, you could. So that's the thing. If you don't really care, you got a retirement account, you're already wealthy, maybe you're just looking for more appreciation, that's great. If you pay a lot in taxes, a lot of physicians I worked with are paying 40, 50, 60% in taxes. There are ways to reduce taxes, even ordinary income, there's ways to do it. And so I think it comes down to like what, when you look at deals, and I talk about this in my book, I have this kind of like a deal funnel of like and I can get into that, but just there's a way you analyze, the market, the operator and the deal, but you also want to look at really what your goals are. Like, what are your goals of doing this? So, and then, you can try to understand what the risks are in that specific thing, but there are things that, again, if you're trying to reduce taxes, that's one thing you're trying to do. If you're trying to grow your cash flow, it's another one. So it's important to clarify what you want.
I appreciate the dynamic nature to that, of that through different stages and seasons of life, the deal criteria or what makes an opportunity is going to change. And so that when you're early on in your investing career, having the priority on cash flow. And so something that's going to give you the tax benefits probably doesn't matter nearly as much. That's not going to be the opportunity for you, versus if you are set and now your greatest savings can actually be in taxes and tax write-offs, as opposed to trying to add another $1,000 a month in cash flow. Right. I think that's a really helpful kind of framework and helps add dimension to deal analysis. And yeah, I mean, we'll take anything you want to give us in terms of that deal funnel or deal funnels from Fire Yourself, right?
Yeah, I can share. Yeah, Fire Yourself. I'll just briefly share it. So it's basically like, okay, so once you've identified what you want, you look at a deal, the top of the funnel. So it's like this funnel basically is the market itself. Now, this typically comes to you in reverse order. So you have the market, you've got the operator, and at the bottom you have the actual physical deal. Well, typically when deals are sent to you, you get the deal first. So you've got to take a step back and say, well, hold on, like first of all, what is this market? Like, what is the ATM machine market? What is the multifamily market in this particular area? And if you're buying in a good market, when I define a good market, is it's a growing market. Typically, if you're in the real estate space, it's landlord and business friendly. There's the population growth, job growth, income growth. Those are all things that are positive, because you're going to have way more people coming in that need, the same of, there's going to be fewer places to live. So that drives rents up, right? And if you're in a place that's landlord and business friendly, you're not going to be like you are in California where I live, where it's like it takes 6 to 9 months often to get somebody out that stops paying, right? Like there's some states where it's like 3 days. If somebody says it's like crap, I don't even know how I feel about that, but I think Alabama's like that. But being in areas where you have the ability, and obviously you want to work with people to make sure that they, if they can pay. So you'll start with the market itself, and even the ATM market, the other market. What is this a growing market? What's that market doing? Then the second one is really the operator. And there's some questions you have to ask of, does this operator have similar values that I have? I used to think we all had the same values, and we don't. We don't have the same values. I used to think everybody wanted to communicate well with investors and provide good reports and be transparent, and not everybody wants that. So I try to make sure that, anybody I invest with passively or as a partner, that they have these similar values. And then once you feel like there's ways in the book I talk about kind of how to do that and questions to ask. And then at the bottom of the funnel really is the specific deal. Like what are the specific things that this deal offers? And I think one of the biggest questions that most people need to think about is, how will I make money from this deal? And even more importantly, how could I lose money? What's the primary risk of this deal? And if you don't understand it, you haven't looked hard enough. There's risk in every single investment opportunity. There's risk of loss of some or all of the capital. You have to understand what it is. And what I do is I'll typically ask the operator, hey, I won't tell them what I think. I'll just say, well, what do you think the biggest risk of this deal is? And then they'll tell me, and then I'll see, well, does that match up with me? And so it's just a way to really analyze. But going back to the market, if you're in, you're in a deal that's just kind of a mediocre deal, and you've got okay operators, but you're in the right market, the market will cause all the ships the tide raises all the ships, right? So that's why I think the market, a lot of people kind of go operator first. I think the market is actually first. And obviously you want to make sure you are with a good operator, but that's number two. And then the last one really is the deal itself.
I think that's super helpful because oftentimes, you can have the best operator, but if you're in a bad market, if you're in a bad asset class or whatever, you could be the best operator in the world, And I think there's a lot of sports analogies around that too. I mean, we've seen some of the greatest athletes have terrible supporting cast and they're not able to accomplish anything. Yeah. So I think that analogy, and what you're sharing makes a lot of sense. Let's camp actually on fire yourself for a little bit. I think it would be fun to reflect on the journey of releasing the book. And so I'm just curious. I think when we had met with you, you were getting ready to get that first one released the last time we had you on. So now being able to reflect, maybe what are some celebrations with getting the book out? What are some maybe ways it grew you? Maybe some results or some return on investment that you didn't foresee? Just let's reflect. Not a lot of our guests have written books and gotten them out, and so I think it'd be fun just to kind of hear how that journey's been.
Yeah. So again, coming back to that, it's in your moments of decision, your destiny is shaped. It was, I think it was November of 22. I was actually at a Tony Robbins conference, and that was like the big thing that came out. Okay, I'm going to write a book. I'm going to do it. And writing a book, it feels like a lot if you've never done it. I mean, they say it's kind of crazy. Might get these stats slightly wrong, but 81% of people in the U.S. say they have a book in them. But only 0.6% of people have actually written a book. And of the people that start writing, only 15% actually finish. So writing a book is most people want to do it. And so if somebody wants to do it, there's ways to do it. I actually started writing, and how I did it, I made the decision. That's the number one thing. The second thing is I just would take a timer and I would time myself. I put it in my schedule, and we're all busy, but I would just say, okay, 60 minutes. And I would just write 5 days a week. It wouldn't work every single week, but most days I would do it. And then within a couple months, I had most of the book done, right? And then I got to where maybe at 35 or 40,000 words. And then I was like, you know what? I feel like I'm at like 80% here. And I need some help to get this across the finish line. And so I hired a group basically to help me finish it and kind of format it. And like, it's not hard to writing a book it just takes work to do it. But the harder part is actually selling books. So now we're actually over 1,000 books now. It's been, I think it was about 7 months, 8 months, and it just feels awesome, and so it became an Amazon category bestseller. And so it's just, there's a lot to it, but I think the process of writing a book, it really helps you clarify your thoughts. And now from the book, I get a lot of calls. I'd say now I get people that found my book on Amazon, read the book. And when someone calls, now if you're like what you do with a syndicator, or you work with investors, if somebody's read your book, what are you going to tell them that's like, oh, here's my philosophy? Like, they've read it. They've and then the word authority has the word author in it. So if you want to become an authority on anything, just start writing something. And it doesn't have to be a book. You've written a couple ebooks as well. And so again, a lot of the stuff is just the discipline of sitting down and doing it, getting the practice of going in and doing it. And so I think, it just felt really great to be able to actually have something physical to sell or to give to somebody. And then it's just a good summary of if someone doesn't know, these 2,500 interviews, somebody doesn't know about what do I do to get started in real estate or investing? I knew I should be doing this. I wanted to create something around that. I didn't really see anything out there that really kind of gave a how-to, and just shared my journey on that really helps people along that path. So anyway, it's been a lot of fun to create it, and it's, led to some awesome results.
Yeah. I love that, man. Congratulations on being part of the 0.6% of people that have actually done it and gotten it out into the world. And I am so glad that you're seeing great return on that. I know that as I've been looking at doing my own first sort of book project and talking with different authors, the selling of a book is hard, but it's not just the ROI and book sales, but that authority piece that you get, and being able to give someone something of value and having your thoughts collected in a spot, and not necessarily having to hop on every call that somebody wants to get on with you to explain your thoughts, to be able to give them something that you've published and worked so hard on. I imagine that's going to continue to pay huge dividends. And yeah, I'm super excited for you with the new book, Rich Brain. Where are you at in the process on that? What is it kind of looking like? Do you have deadlines that you've set for yourself in terms of getting it released?
Yeah, so I'm in a writing group now. This is a little different. I decided to join this group that's working. We're writing together. So I'm the accountability coach for 22 people, I think. So I've got to stay on track. So that's one way you want to keep on hold. Want to be part of something. You hold others accountable. You got to do it yourself.
Right.
So I'm literally started writing yesterday. I wrote the first 1,200 words of the first chapter. So I'm just going to write, and the goal is the goal is within, I think by about September. I think there's like a September, maybe the end of September date or October, to basically have it done. So we'll see. And now that I've done it before, I kind of know some of the steps to get there. But I think it's great if anyone wants to reach out about writing a book. I mean, it's been something that's been really, I have a couple of recommends as far as just things to do. But it's a good journey because so much of stuff we do, there's so many things out there. There's a lot of, podcasts are great. I have a podcast called The Mailbox Money Show. We talk about a lot of these topics and how do you, what are the different streams of, income you can use and different assets and things like that. But when you write a book, I mean, it's people put a lot of time and effort into that. So it's a great return on your time, right? It's a return on somebody could have spent hundreds or thousands of hours on writing this and you can read it in a few hours. It's really amazing, or listen to it in a few hours. And so I think there's a lot of benefit to be a reader and also to create in the space, but it does open up a lot of things, and it's been pleasantly surprising what it's opened up. And I'm just getting started, so hopefully I'll continue to write more books and continue to develop and have more fun with it.
Yeah, I hope so too, for myself and for our listeners. And I think that you've got a real talent for that. And you've gone the self-publish route on both books now, right? Is the way?
Well, I haven't decided the second one. The first one I have, I've self-published, and you get more control over it. You can kind of do more things with it. I'm considering with this one. I just love. You don't really make money on writing books. You make a little bit. You don't really make much, regardless. So I'm like, what I really would love to do is just get this in more people's hands. So I may. At some point approach a publisher and just say, is this, kind of look at the options out there and find some different opportunities. Because I would love it. You may make a little more money or have a little more control over it if you have your own book, but like you self-publish. But I think if you can get it out to more people, it's really about the message. I mean, you're really just trying to get this in the hands of people. And then as you do it, I mean, things come back in other ways, and you can find ways to connect with people in different ways through the book.
Yeah. It's awesome.
Bronson, before we wrap this thing up with our golden nugget round, I got one more question for you, and totally shifting away from book, but you're talking to investors all the time. You're also looking at deals and different things. What asset classes or investments are you excited about moving forward right now, and maybe where some of your focus is?
Yeah, I've got a lot I'm so excited about right now. I think that, the saying, Warren Buffett, be fearful when others are greedy and be greedy when others are fearful. There's a lot of people that are fearful right now. There's a lot of people that have gone through pain through real estate or other things, challenges. It's challenging to buy real estate right now. We're seeing stuff, though, that we're seeing for multifamily and other self-storage and other assets. There are deals we're seeing at 30% discount from where they were a couple of years ago, right? Which is amazing. And I think especially with all the currency that's been created the last 4 or 5 years, I think it's a great place to be. We know we're going to have more demand. So I like multifamily, I like self-storage. I like getting into deals that, we're seeing some distress in now, because I think there's just a lot more safety there. And then I also love, we have a debt fund that we're doing that is involved like first position debt notes at like 50-60% loan to value, and it's paying like equity was before. So we have some, and this is an offer for a specific investment, but it's like 13 to 15%, paid out, it's an annual rate paid out monthly. It's pretty amazing. Like, it's really, really amazing. The debt is always the most secure position in a deal. So that's one thing I'm excited about those things. And I'm also excited about doing some of the e-commerce or other sort of buying businesses. There's just so much out there that, some of these businesses we're finding are, selling for 3 to 5 times profit. It's crazy. You just think about the cap rate's like a 35% cap rate, which is, or something on some of these, it's crazy. So, we're really excited about those, and there will continue to be other things, but I think it's just finding the thing that really makes sense for what we're doing.
Totally, that's good. All right, well, let's wrap this thing up here. When we met before, we hit you with our 4 golden nugget round questions, but I can't get you with the same ones here, so I'm going to throw a couple new ones at you this time. Okay. You've not heard these already. You've not read them, so we're putting you on the spot here.
Right.
Number 1, Why is an abundant mindset important versus scarcity mindset, and how has that impacted your journey?
That's a great question. Yeah, I think when you have a scarcity mindset, you limit yourself and you limit others. It gives you less ability to collaborate. An abundant mindset is there's more than enough out there. If you and I do a deal together, the pie actually gets bigger. And I just think it opens up a lot more in your life. And when you celebrate other people, you can celebrate people that are wealthy or have had great success instead of saying, "Oh, why wasn't that me?" You can say, "Well, that's awesome. Look at that. They're worth $100 million. Amazing. Well, what did they do?" You can learn, you can celebrate them. And so if you want to be wealthy, you've got to celebrate people that have done it themselves.
Better together.
Yeah.
Exactly. I love that. That's great. Next one here. What is some advice that you've heard from experts that in your journey you've realized is completely bogus?
Well, I'll say this with a qualifier. I think Dave Ramsey has helped a lot of people. And I think that debt, credit card debt and a lot of debt is not good for a lot of people. I think, though, that there is a lot of people say all debt is bad. And I say there's a lot of good debt. I want to get as much debt as I can that's good debt. I mean, I had a personal loan that I did for $100K like 4 years ago, and the rate was 2.75%. It was amazing, right? So I'll take as much of that debt as I can because I know inflation's higher than that or whatever. So I think, that's one I think is, debt, that all debt is bad. And then I think, the other thing too, is that people say it takes money to make money. I think there, a lot of these things, there's some truth to it. So I think that is true. It just doesn't have to be your money. Right. So it takes money to make money. And, Robert Kiyosaki would say, and he's all serious. He's like, well, it's selfish just to use your own money. You got to use other people's money, use the bank's money, use the investors' money, use other people's money, but you can do way more. And I think my journey really opened up when I realized wow, I can actually help a lot of people if I'm able to use, help them get where they want to go.
I love that. I love that. And as the authority banker that I am, that 2.75% rate, I'm not offering anything like that today. So
I was hoping by being on this, you would offer me some sweetheart deal there.
That's right. Oh my gosh. Yeah, you and me both.
Yeah, right.
Next one here. Are you a journey or a destination person? And how does that impact you now?
The answer is yes. I'm both. I think if I was going to choose one, I would say it's the journey. I mean, I think, you have to have the end in mind, but you can't live at the end while you're if you live only focused on the end, you just be miserable the whole way along. You have to find a way to have a goal, but just realize that I find there's a lot of constant reframing, right? It's a lot of reframing of just well, I'm not where I wanted to be. And I make these big audacious goals every year, and sometimes they're embarrassing to me how big they are, but it's I don't always, actually I probably hit about half of them, but I make progress on all of them, or I'm just this happened. I was talking to someone this week, and I was I run these Spartan races. So I do these obstacle course races, and I'm out there, and I'm 43 years old. I'm out there and I've had knee surgery in the past, and I'm doing all this stuff, and I'm out there, and I've had just different injuries I kind of work through, and I was out there one time, and I was I wasn't running as well as I wanted to, and I do this competitively against other guys that are kind of my age, and I remember being out there just feeling oh man, I wish I was running faster, and just feeling down about myself. And then I stopped and I laughed, and I was I'm 43 years old. I'm out here running. That's awesome. I'm doing this. It's the idea of the gap and the gain, right? That's a wonderful book. If people haven't read The Gap and the Gain, it's the idea that there's always going to be this off on the horizon. There's always going to be somewhere else you want to go, but you've got to stop. And instead of measuring how far you are from the goal, measure backward from where you've come from. And that's so much, it leads to gratitude and joy and peace. So I think if I was going to focus on one, I'd look back, but I also think it's good to kind of keep looking back and looking forward.
It's great. I don't think I've heard anybody say that better. So I love that answer. You got to be in both camps. That's good. Last one here. What is one piece of wisdom you'd give to your younger self? And I would preface that to add in mind, thinking about our audience and, thinking about maybe being the proactive person versus the passive person, or jumping in and taking risk. What's one thing you'd want your younger self or our younger audience to hear?
I think from what I shared, having the revelation, we get things when we get it. So we we got to be kind to ourselves. Okay, I was, 38 or something. I was oh my gosh, I got to do this. I'm going to go for it. Or 37. And, I've met people that are like 20 and they're just like, yeah, like let's do it. And like, we could probably imagine, oh, I wish I'd tried that when I was younger. But, we get it when we get it. But I think if I were younger, I would say just get involved with people doing, big deals, doing big things that are like, that feels impossible. But when you start hanging out with people like that, it's just like the lids of things that you imagined, were there are just, they start to disappear. And you're like, they don't seem that smart. They don't seem that like amazing, like, I mean, they're great, but like these seem like kind of just something that I think I could do that, and so you start to convince yourself. So I think that's a big one. And then also just realize that everything is kind of working together. Even if you feel like you're missing it, you're going to pull from different things, from me, youth pastor, to sales, to doing all this stuff I'm doing now. And so I think it's just everything can work together.
It's great advice, man. The only thing that I would add to that for our listeners is that they should also pick up Fire Yourself and
Thanks,
and incorporate that in their journey. Speaking of which, man, what's the best way for folks to connect with you, to follow along? Where should they pick up Fire Yourself?
Yeah. So I got a few things you can go. Yeah, Fire Yourself is you search Bronson Hill on Amazon, you can find it there. I have a few things, you can go on my website, bronsonequity.com, under resources. There's some free giveaways. We've got how to use inflation to your advantage. We've got, I think actually, if you text the word, I hope I get this right, but if you text the word inflation, I think it's inflation. Anyway, I'll have to, I feel embarrassed I don't have it.
We'll put it in the show notes.
we'll put it in the show notes. I'll check, but it's either inflation or it's guide to 33777. You can get that guide, and it's awesome. So anyway, but no, I really appreciate you having me, guys. It's been a lot of fun, and love what you guys are creating. I love the value you're creating. I love the questions, and this has been great. So thank you.
Man, it is an honor, as always, to have you on. So glad to connect again. All the best to you as you continue to work on Rich Brain. I think that's, just the way that you framed that of it's Rich Dad, Poor Dad meets Atomic Habits. I'm salivating over the possibility of it.
Yeah, I know. I'm excited about it. I'm like, I guess this is going to be really good. Yeah, I'm excited for what's developing.
I'm really excited for you, man. And just grateful for all the success that you've had, and wish you all the continued success, and look forward to catching up with you again in the future. But thank you, Bronson. Listeners, do check out the show notes. All the links are down there. Be sure to subscribe. We are active on YouTube. That's probably the best place to engage with comments and likes and being able to share things. So appreciate you showing us the love there. And we will be back next week with another episode. Thanks, everybody.